This is the BioCentury Show. The BioCentury Show is brought to you by Cytiva. From cell to tissue engineering, the frontier of advanced therapeutic medicinal products, or ATMPs, is vast and lacks a clear roadmap. Cytiva's expertise, technology, and services can help you navigate your ATMP journey for nucleic acids, viral vectors, cell therapies, LNPs, and more. While you master the science, we'll focus on fine-tuning your manufacturing to get you to your next milestone efficiently. Cytiva is part of Danaher, a global science and technology leader. Along with Danaher's diagnostic and life sciences businesses, Cytiva brings an innovative mindset to our collaborations with customers to help them improve patient outcomes.
Hello and welcome to the BioCentury Show. I am Simone Fishburn, Editor-in-Chief at BioCentury. I am delighted to be joined today by Robert Darwin from Sidley, Austin. Robert, we haven't actually had many attorneys on this, so it's a pleasure to have you as I think maybe our second or third, but that's over 3 years. So we're keen to get into some of your thoughts on what's going on. Now, Robert is a leading global M&A and private equity lawyer and works with global life sciences, healthcare, and technology corporations and with investors. Robert is based in London, and that's where I want to start, not only because it is my hometown originally, but because we're a week away from the Jefferies European Healthcare Conference and what is growing into London Life Sciences Week. So throughout this conversation, Robert, we'll get into your thoughts on the changes happening around us, political, we can't ignore, an economic level, and then maybe get into some of the trends that you see in M&A and private equity. But I want to start with the Jefferies conference, fast becoming the JPM before JPM, and I'm sure neither bank would want us to call it that. Aside from the frenzy around us, and a lot of people prefer it, does it have any significance for the UK's place in the global biopharma ecosystem? Acknowledging that London's long been an important financial centre, does this mean any greater importance for London or the UK with respect to our industry? And what do you see on the ground?
Thank you, Simone. Very delighted to be here and to be able to speak to you all. Thanks for the kind intro and the opportunity. On your point around Jefferies being the JPM before the JPM, I wonder if that makes the Sidley Healthcare Investment Conference the JPM before the JPM before the JPM. But that's probably a subject for another.
We can do that. We can work with that.
Podcast. Yeah. Delighted to fly the flag for the UK on this particular podcast. So look, I think that the growth in relevance of the UK from a biopharma investment perspective is real and not just a function of more and more people wanting to come and spend a week on vacation in London in November. And I think it's reflective of the fact that the UK has always had an outsized relevance to the life sciences and healthcare sector. But the investment landscape in the UK has taken a bit of time to catch up to the scientific landscape. I mean, we've always done drug discovery really well in the UK from the earliest times. I mean, this is where antibiotics were invented, vaccines, imaging, all of which are technologies that have gone on to be massively commercially successful, and they've often been invented here. But we have a greater and better tradition of deal making and a significantly higher level of particularly foreign and now some domestic investment interest in what's going on here in the UK. That's becoming a nice developing snowball. It's always been going on, but we've done good work to both promote the UK life sciences and healthcare ecosystem and to continue to make it a good place to come and do deals. And so it's certainly no accident that at your BioCentury event last year, I had the pleasure of going to, it was completely packed to the rafters. And I think that's reflective of the fact that people are here in London and they want to find deals.
Thank you for that. And we will be doing again a BioCentury event partnered with the BIA next Tuesday, November 19th. So stay tuned for that. Let's just stay in the UK for the moment. The new government and the last government have at least verbally made life sciences an important growth sector. I just want to ask you whether you have any comments, there are aspects of the autumn budget that the Chancellor just delivered that you see affecting M&A or deal making, and if you could walk us through them.
Yeah, I mean, look, I think with the budget, it was a mixed feast in terms of what was offered and what was taken away. I mean, the backdrop here is like you in the US, we've had a recent change of government in the UK, and we now have a very strong mandate for the UK Labour Party. And after strongly insisting that they wouldn't raise taxes and spend any more as part of their election campaigning, when they came in and discovered what they consider to be a significant financial black hole, we've had a budget which has tended to raise taxes a bit and has tended to spend a bit more, which has implications for life sciences. On the good end of the scale, we have some modest, and I think modest in the context of governmental spending gifts to life sciences investment in the UK. I mean, they've allocated, depending on how you look at it, around 500 million to $1 billion for additional life sciences investment by government, which sounds a lot when you say it, but it's about the size of an upper mid-market private equity deal. So it's not a huge game changer. But they have also kept open some important windows that drive innovation. So we have a particular tax relief scheme here in the UK where you get tax relief for research and development expenditure. And they haven't particularly increased amounts allocated to that, but they also haven't reduced them, which implies a commitment to in encouraging that. Of course, the biggest amount of money in terms of healthcare has been fired into the UK NHS system, which will work its way through to commercial opportunities for life sciences and healthcare companies here. On the taking away side, there have been some changes to taxes which reward entrepreneurship in the UK, particularly capital gains tax rates have gone up. There have been adjustments to other taxes that relate to entrepreneurship. And so around the margins, that has the effect potentially of dampening down some of the entrepreneurial spirit and the risk-taking that goes along with biopharma. But look, overall, the government rightly recognises that life sciences and pharma is a key driver of value here in the UK, and they certainly don't want at this time to be damaging really valuable and value creative industries in the UK. So it was tending to the positive, I would say.
So quickly following up on that, and thanks for bringing up the R&D tax credits, and also the cap gains changes. As I understand, those are for investors who are domiciled in the UK, or at least paying taxes in the UK. I understand that there was also generally a government incentive to try and bring in foreign investment. Do you see any greater momentum there for life sciences that would draw, what you really want is these foreign investors coming in? Are there any sweeteners there that are relevant?
So I will be careful getting into some of the real fine detail of the budget, because as a lawyer, not an accountant, I always find myself on slightly unsteady ground. That having been said, I think that the perceived ecosystem for significant investment in things like manufacturing in the UK has gone from, more chilly than one would like to a bit lukewarm. And, you can see the evidence of that. Last year, Pascal Soriot, AstraZeneca, opened a big factory or manufacturing facility in Dublin, as opposed to the UK, whilst commenting that we really need to do a better job here in the UK of encouraging international investment in our domestic activities. Subsequently, though, I think I have seen that AstraZeneca has doubled down on their investment here in the UK. So I would say, nothing has happened that's moved the needle, and there's entries probably on both sides of the ledger. In one sense, you've got an assumed strengthening of union and employment rights that tend to come with governments that tend to the left, but also, an understanding that this is a really important sector for the UK. And also some of the investment opportunities may be tied up a little bit with what goes on in the US that we might chat about a bit later on. So overall, I would say, maybe this will be a theme tending through, things tending towards the positive, but no huge dramatic shift that I see in that area.
Well, let's go straight now to the US and Robert, you and I will stipulate that we will refine this conversation to the relevance of biotech in our industry. And obviously, we've all just had a few days to digest the news of the new Trump administration coming in. As of recording this, obviously, there have been no major announcements that we know what might have affect the HHS or the FDA or even the FTC, although we can assume it will be different. Sitting outside of the US, is there any things that you're looking at or expecting from this new administration that you see as, relevant and important for our industry, both in and outside of the US?
Yeah, so look, let me first acknowledge that I've got the wrong accent to make any.
Well, the right one.
Oh, the right one. No, well, I've got the wrong accent to attempt to make incisive comments on the relevance of these politics from a domestic perspective. So I'm just commenting from my view of our ocean. But the importance of the US market for pharma and healthcare is fundamental to our industry. It's where lots of people try to launch their drugs. It's where huge amounts of money are made, much frankly to the chagrin of Messrs. Biden and Trump. They have that in common. And so it's clearly relevant to us in Europe and elsewhere what's going on. I think that from an industry perspective, a Trump presidency, again, probably tends towards like on balance positive with maybe a couple of wild cards that we see. I think that it's fair to say that both Trump and Biden have been focused, and Trump will probably continue to be focused on pharma pricing. If things like the IRA, I don't expect to go away, despite for the fact that I don't think a single. When I watched it go through, I don't think I saw a single Republican vote for the IRA, but it does have good or it has impacts on people in a lot of the red states. So there's a lot of red states now, so I suspect that may be left in place. I think betting will probably suggest that the FTC may tend towards being slightly less interventionist than has been the case under the previous administration. And that may mean that people feel more confident, and maybe we'll talk about M&A a bit later, but people may feel more confident as to closing deals that they may have felt were a little bit more on the margin. It's possible actually that Trump and the Trump administration could actually attempt to push pressure on pharma pricing, particularly comparing the US and the rest of the globe, even harder than the Biden administration did. And maybe we'll see a resurrection of some of the most favored nation efforts that weren't quite successful in the previous Trump administration. That's the sort of question. I guess there are probably two obvious wild cards, it seems to me. The first is what changes there might be at the FDA in particular, and whether there will be a decision to appoint someone who may be perceived as more of a continuation type candidate and stable in the mold of Mr. Gottlieb, as was, or whether the role that Mr. Trump sees for Robert F. Kennedy Jr. in his new administration is to go in to head the FDA. And we're recording this on the 11th of November, looking at one tweet that Mr. RFK sort of put quite recently, essentially saying, if you're in the FDA and you're wasteful, you may want to be looking at the alternative employment is, I think, a marker of how he views changes needed in that organization. So that could be wild card one. Wild card two, I think, is that some of what's going on in pharma is kind of entwined with the way that Trump thinks about China and how that will be wrapped into trade policy, both in terms of exchange of IP and whether we might get, we the industry, but the US might get tougher on China in relation to that, whether and how Chinese manufacturing activities in the US may be restricted, and also the degree to which I guess this might function in some sort of some of the trade deals and trade pressures and tariffs that Mr. Trump may want to erect. He might want to make some countries choose. Are you in our camp or in another camp?
So, Robert, before we go to break, let me just ask something about the China. And thank you very much. And I think it's just really important for people in the US, regardless of, and outside the US, regardless of what they think will happen, to, hear you channeling the thoughts from overseas. This is what people in the industry overseas are looking at, and that's how they're weighing their calculations and the decisions they're going to make and the risks that they're willing to take. I do want to ask just very briefly, as we look at China, and there's really tremendous pressure on that relationship, which, acknowledging it was already ramping up with Biden. We see in China and in Asia generally a tremendous amount of innovation. We now have a bear market, and on top of that, geopolitical pressures. And so they are looking for investors, and they are looking for ways to take their programs forward. Is this an opportunity for Europe and ex-US, either investors or players, to find assets from China that US investors might be more wary of?
The answer is yes, to the degree that the US doesn't do what I suggested it might do, which is start to try to make people choose between and it's about the level of intensity that this is approached with. I mean, there are certainly when it comes to out licensing, so taking assets from China, which we're seeing a lot of deals in that space, and bringing them into the European market, we have certainly seen an uptick of that over the last year or two. And I think that corresponds with a bit of a downtick of that in the US. I think there will still be challenges for European companies to do deals that put valuable IP into China. There's a lot of focus on that, or for significant Chinese investments in critical industries here in Europe. We've got our own FDI type regulations. So I think it's an opportunity to the extent that through other deals, Europe, or certain European countries more likely, are not forced to choose teams and start to voluntarily restrict their own activities.
Well, I think that's a great place to pause. We're going to take a brief break, and when we come back, we're going to talk a little bit more about specifically M&A and private equity and some of those trends. Thank you.
For 3 decades, BioCentury has helped biopharma executives and investors make business-critical decisions and build larger networks with peers across the biopharma innovation ecosystem. Our goals are simple: gather the right people in the room to partner, network, and debate critical issues facing the biotech industry. BioCentury's upcoming events span the globe and feature topics from translation to company building to deal-making and investment. We hope to see you on the road at an upcoming BioCentury event. Visit biocenturyontheroad.com for more information and to register.
Hello, and we are back at the BioCentury Show with Robert Darwin of Sidley Austin. Okay, Robert, it sounds like there's both headwinds and opportunities. We have had a fairly robust M&A environment this year, 2024. I think that at least in terms of the number of deals, maybe above 250 million or something like that, we're tracking in similar numbers to last year. What do you expect to see in 2025? Let's just start at that level. What are you expecting for next year?
Yeah, I think it is most likely that we are going to now start to see a real acceleration of M&A activity into 2025 and beyond. I've actually answered this question a lot in various ways over the past couple of years. And I always, at that time, was saying, look, we're sailing into some headwinds. We've got historically high interest rates. We've got significant challenges with inflation. We don't know who's going to be in the White House come November. Those 3 things themselves are significant breaks on certainty. And we've also got still a wide, on some assets, bid-ask spread between what people think it should be worth and what people want to sell things for. And then driving things forward, nevertheless, is the just pace of innovation, the need to continue to rebuild patent cliff, and also the fact that some of the market actors, including private equity funds, are just sitting on record levels of what they call dry powder, and people on the street just call huge amounts of money that are unspent. So when you think about the headwinds, well, you're starting to sort of knock them off, aren't you? I mean, interest rates starting to come down, inflation starting to be under control. We know who the president is, and actually, helpfully, it seems that it's not a disputed. There was always the risk that it was going to be a marginal victory that we then spend the next 6 months litigating, there doesn't seem to be any credible risk of that. So it's not a value judgment, but all of that certainty helps people make long-term decisions, and that tends to drive value. So overall, I think there's a lot of drivers, and just sort of a need to do deals to replenish assets, to replace innovative pipelines, and I certainly expect that to continue. Plus, some very interesting therapeutic areas that are driving a lot of value.
Let's come back later if we have time to the therapeutic areas. I want to stay with you for a minute. So, it's always a former head of pharma former head of partnering at one of the farmers, once said to me, farmers don't do a deal because it's cheap. They do it because they need the asset. So for them, that's not a driver. But for the biotech companies being acquired, we've had a very tight financial market for them. To what degree then, if the capital markets become more friendly and they are able to stay independent for longer, to what degree do you think that makes a difference? I think what I'm really asking is how much of the M&A is driven by the fact that they need the money, that they can't survive otherwise, versus it's all driven by the pharma and what they want in terms of building their pipeline.
Like all things, it's a combination of factors. One thing is for sure is that, and obviously not all biotech companies are the same, but over the last few years, a number of the biotechs that are supported by venture and growth capital investors have sort of been in a slight twilight zone where actually, if it was up to those investors, they would have exited and moved the company to its next stage of development 2 or 3 years ago. But with the markets closed and with the bid-ask spread that I talked about between acquirers and sellers being so wide, we've had this phenomenon of sort of continuation type deals where, you give people convertible notes and you use other financial devices to keep the company alive and running, but never really having the important financial event. I think it's difficult to see how that's going to continue for too much longer. So either the public markets will open on time and there will be some companies, the right ones, which are floated and will continue independently, or there will be an ability for acquirers in the market to pick up assets of value at, maybe slightly better prices. So I think we'll see, but there's a need for exits coming, and that will either be on the public markets or it will be through private M&A, and the particular modality will depend on how quickly I suspect the public markets really get back into business for biotech.
So staying with M&A for a minute, you mentioned CVRs. I think you mentioned CVRs, right? And we've seen a couple of other...
I think I'm about to regret mentioning them, but yes.
Maybe I am. I'm a simple pharmacologist by training, molecular pharmacologist, so, But we've also seen some innovative deal structures with concurrent spin-outs, Inhibrx, Sanofi, Pfizer, Biohaven. Of course, the famous one was, J&J buying Actelion and spinning out Idorsia. Yeah. Do you expect to see more kind of innovative structures in M&A? You are sitting behind the scenes, and I really am interested to know. You talked about the bid-ask spread. So how are you bridging that divide? I think that's probably part of your job, to get everybody to a deal. So tell us a little bit about that and what dials you can turn there.
Yeah, I mean, fortunately, people are having newer, good ideas all the time. But a lot of the ideas to solve the problems already in existence. I mean, clearly, as you buy very big groups, not all of that group will have the same value in the hands of a buyer as it might have in the hands of someone else. So as you say, there are deals which are put together on the supposition that you will buy something and then have a subsequent buyer for another part of the asset, which will help you realize value. Interesting about those deals is some of those deals help the antitrust position, because you're buying things that might otherwise be too much of a concentration in one area, and then you can pass it pass it to a willing buyer and rid yourself of that issue. Some of those deals, though, can make your antitrust position a little bit more challenged by other people, because depending on who you sell it to, they might say, well, hang on a sec, this person that you're selling to, maybe they wouldn't have been the obvious, maybe they would have had a hard time buying it themselves, but if you buy it and then sell it to them, is that fair? So that's one thing. Clearly, there are other ways of bridging value gaps. If someone says, well, I think my company is worth X and you think it's worth Y, well, I'll let you buy it from me for Y, but then as it performs, you need to give me additional value down the line. Or, you might say, I've got this great asset in the clinic in phase 1, and what you may pay me for it today may be worth a sliver of what it's worth if it goes through to phase 2, 3, 4, and I'm going to be embarrassed if I sell it to you for this price today. So you can have what they call anti-embarrassment structures that pass value back. Really, we can create structures that are in the service of whatever the commercial agreement are, and the way to solve value gaps are multiple.
So let me just stay there for a minute with this bid-ask divide. I want to know, we certainly saw at the beginning of the market downturn and the collapse, I think I should call it. Actually, it's sustained for a good year after that, where you'd have biotechs who had really grown up and only been used to the good times, saying, no, my real valuation is it's 2019 value, or my real valuation is that, and I'm not getting that.
Yeah.
When you talk about the bid-ask divide, is that still a carryover? Have people sort of adjusted their expectations? And I think here in this case, I'm probably talking about the biotech side of things, right?
Yeah, I think we're seeing that writ large, because let's use an easy example. In housing market issues, you've got sellers of houses that say, look, actually, this is a $3 million house and it's in a good area, and why is everyone offering me only $2 million for it? And for about 3 years, that sort of works. But when you need to sell your house or you need to pay the mortgage and the only offers in town are $2 million, that tends to ultimately be the value that you accept. And we're seeing, I was going to say, a more sophisticated version of that, maybe a not very more sophisticated version of that, writ large. And clearly there are people who accept that in the current environment, because of demand and supply and other things, their asset may be worth a little bit less than they'd assumed. But frankly, as markets come back, it may not. It's really about time and the ability of people to wait, and their investors and backers to wait.
So one question that we actually talk about a lot at BioCentury, maybe you can give me some insight to, as you sit in on these deals, there's this idea of the lead asset being where all the value is versus the pipe versus the platform, right? In platform companies. And it certainly seemed that in, the post-bear market environment, just the values all in the assets, maybe just the lead asset or maybe the sum of the parts. What do you think about that in terms of trends? Do you think that there's value coming back for the platform itself intrinsically, or do you think we're in a just count up the assets era for a while?
It's always difficult. You never quite know where we are at the moment until you look back on it.
Until afterwards, right?
Right,
yeah.
but I'm certainly seeing deals in which platform assets or secondary assets are given value of some sort, even if it's not upfront day one value, but value where there's the ability to perhaps earn milestone or other payments as secondary assets are brought forward, may sort of come. A lot of it is as ever demand supply in environments where funding and acquisition funding is very tight, and the number of people that can buy your asset is significantly lower. It's easier for the buyer to discount value in things that are unproven or just have a risk profile that's impossible to judge. But when things get more competitive, then buyers or subsequent investors are forced to think more incisively and carefully about where they can find additional value, ultimately for themselves. so they can pay more for the asset and be successful in acquiring it.
So another thing that I personally am focusing on right now, in something I'm pulling together and a conversation I have with a lot of people, is around first-in-class versus best-in-class assets. And I know that inside companies, they spend a lot of time, thinking about this. First-in-class is obviously easier to make that statement, at least at some point in development is. Best in class, you don't really know that until you're out there.
Yeah.
In terms of valuations, how are you seeing those conversations going? In terms and appetite, let's say, from acquirers, from farmers, is it, how much emphasis is there to have a first-in-class asset where the commercial story is easier, let's say, or the marketing story is easier versus a best-in-class?
Yeah, it's a very specific situation dependent question. I mean, other than in like the generic world, because in the generic world, you want to be first, or at least not third. In the innovative world, I clearly, if you are the first in class, you're automatically the best in class because you're at least for a short period of time, because you're there and you're the only option, and that has its value. I think the value of being first in class does depend on what other assets are expected and the timeline for which you think you may have the market to yourself. Clearly, the ultimate quality of assets and treatments and the ability to emerge as a first line treatment of choice for an important indication is extremely valuable, and some of it also depends on like where on the patent and other timelines these products are, and for how long you'll be able to protect your position as being best in class. So it's not a question with a straightforward answer, which is why so many people spend a lot of time.
Yeah. And here was I thinking you were just going to give me a magic formula, Robert.
No, yeah. if I would, I'd be a biotech investor and not a lawyer, maybe. But
yeah. Let me end with a question about private equity. I just want to remind our viewers that we had 3 very big deals, right? Claris, Blackstone in 2018, LSP and EQT in 2021, 04 actually, Abingworth and Carlyle in 2022, and Sofinova, where 20% stake, I think, was bought by Apollo in 2022. So that time frame that I just gave you was 2018 to 2022. And we have seen private equity become this growing force, with a few VCs either being acquired or, as I pointed out, selling a minority stake. Now, one concept that was prevailing was that these firms would have deep enough pockets to really provide the growth capital that's for a long time been lacking, in particular in Europe. Haven't seen any major deals since 2022. You do a lot of private equity work. What do you think is the future of PE in this ecosystem? And is this something that ultimately can be transformational, or do you see it just as another player?
So I think the first thing I would clarify is I think the word private equity is a really broad term that encapsulates lots of things.
Fair point.
Private equity is really the deployment of privately raised capital to attempt to increase its value through acquiring a business and growing it, or investing it as growth capital. The reason I wanted to clarify that is the deals that you mentioned, which were all totally legitimate deals to mention, are actually private equity funds buying specialized life sciences investment funds. Correct. So that they themselves can keep up with the demands of their own investors and offer them exposure to clinical risk via private equity strategies. And the reason I mention that is that exposure to clinical risk, i.e. assets that are still on the success, complete failure timeline, is actually something that private equity stayed clear of until about 2000, really until a bit before the deals that you mentioned. Because where private equity is traditionally played is in scaled companies that are already past that timeline. And they've always had this love affair with outsourced pharma services or drug discovery companies or comms or CDMOs that aren't exposed to this like binary success failure point. And they still can continue to...
And they bring revenue streams sort of much sooner.
Correct. And they've been able to ride, actually, in some cases very effectively, the sort of funding wave of an ever increasing number of biotechs engaged in clinical development. Well, if you're a services company that outsources clinical trial equipment, it's kind of a bet you can't lose because it's going to keep getting bigger. To answer your specific question, they are already here. They have changed the ecosystem because they've increased the capital that's available. The problem is there just haven't recently been enough deals for them to do, which is why they're all sitting on so much dry powder. They will continue to be important. They have changed the game a bit, but that's historic. They're now in the game. The game is bigger. They are important. And I think we're going to continue to see more of them.
Well, that is a great and optimistic, I think, place to end this. Robert, thank you very much, and look forward to seeing you hopefully in London.
See you in London. Thank you for the opportunity. Take care.
BioCentury would like to thank Cytiva for supporting the BioCentury Show. To gain more insights into therapeutic advances and biopharma sustainability, read the report now, available on cytiva.com.